Does this add fuel to the fire? Fuel is out of control. We're already seeing a shortage, and does that mean more people are stocking up and using their fuel differently if the costs change? Yes, this is a great relief for budgets, but does it change people's behaviour?
Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. How do you invest your first $2,000? How do you build that up and make it into a real portfolio that will pay you passive income? We're going to cover that, as well as all of the news this week in the podcast. We're going to talk about things like the cuts to the fuel excise. We're going to talk about surcharging. What the hell does that even mean, and why does it matter to you? We've got questions ranging from how to restart after you've just solved a vice. In this case, something to do with a gambling debt. You're restarting. What do you do? We'll cover all that and more in this episode of the Australian Finance Podcast. Gemma Mitchell, how you doing?
I'm doing great, thank you. How are you?
Good. I've got my new T-shirt collection.
I don't know how I feel about casual Fridays.
Yes, so Rocket Man with a picture of Kim Jong-un on my T-shirt. You know, this is all part of Finders Keepers. This is the influence you have on me. I went to Vietnam trying to save money, and I come back with these. Yeah,
so you spent money on a terrible T-shirt.
Good thing is, it's horrible quality. It looks like it's halfway between a male and a female fit. And I'm pretty sure I overpaid.
But you had some wins while you were there, because you put some on your Finders Keepers challenge, which we'll talk about shortly. But you did have some wins there with clothes.
Yes, we did indeed. It was a good trip, and I'm glad to be back in Australia where you can drink the water from the tap. That's always a massive perk for Australia. But we're going to talk about the fuel excise. We're going to talk about card surcharges. What does that mean? Mm-hmm. People don't know how much they pay at the terminal when they tap their card. It's actually getting out of control.
It is. Yep. So the RBA's made a big announcement around that.
Yes. Before we get to that real quick, what have you been up to? What's been making news in your life?
Renos, house renos. So I have finished some. So I started like 100 projects that I didn't finish, and I'm slowly chipping away at them.
Did you get the you said you did the splashback. Yes, it was a 5-minute job, and then it turned out to be multi-days.
One of my major faults is I think everything is a 5-minute job, and that I can do things myself, so I start them. So yes, I took out the splashback myself, and then a friend replastered it and then put the splashback, and it looks so good. I love it. It's I'm really, really happy with it. Getting a new letterbox put in in 2 weeks' time, which is absolutely blown out. It's actually a bit ridiculous, so we won't talk about that.
Well, we will, because it's part of Gemma actually found out this morning that she fell behind on the Finders Keepers challenge. If you're just catching up.
For like 10 minutes.
This is the challenge that Gemma put to all of us, not just me, but to save $10,000.
Yes.
And you said you're going to take that $10,000 and roll it into a Japan holiday.
Yeah, so I asked the kids, so as part of the Finders Keepers challenge on the Australian Finance Podcast, we do the summer series. So we were putting our money where our mouth is, or our tips, and putting them into action ourselves, and then tracking how we're going. So this whole time I have been selling stuff on Marketplace, saving on like cashback sites and things, just going hard. And I have been winning this whole time.
Yes.
And then I got to the office today, and Owen had updated his tracker for the first time all year and had surpassed me. But then I looked at some of the things on his tracker, and I was like, well, I have done those and I didn't put them on mine. So I quickly updated mine. He was coming first for like 10 minutes.
What were the ones on my list that you thought were like you were surprised about?
I was surprised that you did it, full stop. So the Vietnam, I like that one. You got a heap of suits or stuff made, and so you saved quite a bit.
And obviously,
Yes, but then it reminded me, so I'm doing this stone letterbox, and the builder quoted a set price, and then I went and sourced the stone and then got the letterbox insert, and that was like cheaper than what they were going to do. So I quickly added all of those.
I feel like
I'm not ready to talk about how much it's blown out.
Okay, but let's just say Gemma did tell me this morning that she does She likes nice things. I think it's fair to say.
I do like nice things.
Yeah, and you like a nice letterbox.
Letterboxes are my passion.
Really? Like I can't even. I'm happy not to have a letterbox. You know what I mean?
Okay, so at the last house that I had before I got divorced, we had this big, beautiful Queenslander, and we'd renovated it, and it was our dream home. And then we put in a big stone letterbox, and it was just it's kind of like a front fence, and it was gorgeous. And that's no longer my house anymore. And while I don't want to live at that house anymore, or the husband, every time I pull up, I'm like, oh, the letterbox. So I'm getting one made at my new house, but because I don't have the husband to build it, I have to pay somebody, and it is blowing out in costs. I'm actually shocked.
Okay.
Full disclosure, I will disclose when it's done, but right now I think it's going to be like $4,000, and I'm like, what have I done? Anyway, I better love it as much as I think I'm going to.
But you have found some ways, this is how it ties into the finders keepers, is you have found some ways to bring down the cost of said letterbox.
Yes, yeah. So I've been I sourced the stone, I sourced the letterbox insert. So I'm doing what I can to bring it down. But yeah, the initial thought was, $2,000's a lot for a letterbox. But it's going to be like the front fence type thing. But now that's definitely blowing out.
Are you, like, if you were to drive past on the streets, just the random streets of Australia, would you be like checking out the letterboxes?
Absolutely.
Really? Mm-hmm. What do you make of, okay, here's one. All the rage right now, it seems to be, are letterboxes that you can put parcels in. They're like big drawers.
Yeah, I got one of them.
Oh, you did?
Yeah.
Wow.
Yeah, so I got the insert of that. So if you want just a standard letterbox with just a letter slot, you can get them for about $100, and then you can put them in a fence or in a better block or stone. The ones with the packages, which I got,
that'd be expensive.
$500 was the cheapest, like, insert.
Wow.
So that was not an expense that I was expecting on top of this.
But maybe that's like a quote unquote long-term investment, because it's stopping you from having to go to the post office like every single day of the week when they're just like, nah, no one's home, see you later.
And safety. I live in a rough area.
Oh, you do? Yeah. I mean, the Sunshine Coast, it's known for its thefts and other, letterbox related things. Okay, so you're still back ahead now after your update this morning. You are currently sitting at $4,016, and I am at $3,500. We did have a question sent in. Maybe we can just quickly jump to this. It wasn't a question at all, actually. They say this is from the name Finders Keepers, is what they provided. They said, "Hey guys, no question, but just wanted to let you know it's the start of March and I'm already at $5,000. So they must be up a fair bit by now. So I think I'm beating Gemma and definitely Owen. Main things were car insurance and electricity changes and selling some stuff on the buy, swap and sell pages. And I'm currently working on increasing my income, working through your summer series workbook on that." End question. That's pretty awesome.
Yes, that's great. And people have been sharing their trackers with me, and a few people are at that 5,000 kind of mark, and they're so creative on what they're doing. So that's probably keeping my motivation up. And now Owen actively participating, I'm a lot more motivated.
Yeah, I feel like I'm going to blame Emily, who didn't give me access to the workbook. So sorry, Emily, I've thrown you under the bus. But seriously,
you could have gone to your website, Rask Media website, and
downloaded it. And whatever. I mean, who knows? But at the end of the day, I think that I'm going to catch you.
Were you back in the game?
My biggest one was actually just reusing timber for the shed that I built, which also was a massive blowout, by the way, because I just got a quote from the joint for some weatherboards, because I'm like, I don't want one of those garden sheds. Like, one of the tin ones you just kind of put together. Like
Colorbond kind of.
Yeah, you get frustrated at yourself and you have to go to bed early because you're so, Anyway, I wanted one that actually looked like a weatherboard, like a house. Right? Yeah, so that's going to be about $3,000.
For a shed?
Yeah, for a shed.
Oh, so rather put that towards a letterbox.
Yeah, true. Well, anyway, so we've got two news updates. We've got the fuel excise update, which you've gone, down this rabbit warren and figured out what that even means.
I didn't know a lot about it, so I have been learning about it. And then today is the 31st of the 3rd. This will come out, next week. But the RBA just announced today changes to debit and credit card surcharges. Yes. So I thought we should definitely talk about that as well.
Yeah, for sure. So why don't we start with the excise? What does that even mean and why does it matter?
Yeah, so everybody is feeling the pinch at the moment, regardless if you've got unleaded or a diesel car. We are feeling the pinch, kind of every aspect of our finances, groceries, electricity. Mortgage rates just went up, so that's been passed on by banks, and now fuel is out of control. So what this is the tax that the government takes on fuel. I was actually surprised. It's not a percent. So there is the GST, which is a 10%. The 10% GST is standard. But this excise is a set amount. So it's 53 cents at the moment per litre, which is huge, that the government takes on top. So that's what factored into our fuel prices. So what they're actually going to be doing is halving that. So a 50% reduction for 3 months from the 1st of April. So what this means is, if that's, passed on and fuel prices weren't to change, we would see, rewind, based on it being a flat amount, and it does change, they change it twice a year. But if we see that 50% reduction, it means our fuel is going to be 26 cents cheaper at the pump. But importantly, it comes into effect on the 1st of April, right, which is from recording time, which is tomorrow. But if you think about when servos, fuel stations, buy their fuel, they're paying this amount. They've probably got stock there already that they have to pass on this, what they've already paid. They've paid the 100% of this. So you won't necessarily see servos click over on the 1st of April and this drop by 26 cents.
Right.
It'll probably trickle in. That's happened before in the past, and it took up to 6 weeks for some areas. It depends on competition and how much stock they had. But it was really interesting to look at this. And the projection is that this 3-month reduction will cost the government, like taxpayers, $2.55 billion in the tax budget. That is how much that 50% is worth.
Yeah, people spend a lot on fuel, don't they?
Yes.
It's like cigarettes and similar things like that, where the government levies onto it before you even bought it.
Yeah. So a major cost comes from that. And we were just talking before we hit record, does this add fuel to the fire? Fuel to the fire, no pun intended, that we're already seeing a shortage and now people are going to be able to afford. Does that mean more people are stocking up and using their fuel differently if the costs change? So it's kind of like the housing crisis, how, yes, this is a great relief for budgets, but does it change people's behaviour? And we're already
in a crisis.
In a fuel shortage. So it'll be interesting to see what happens over the next 3 months. But if you are feeling the pinch with fuel prices, some relief is coming.
Yeah. So the short version is the government said, everyone's in a crisis, let's cut this tax that we normally charge.
Yeah. They'll take a hit to help us out.
Yeah. The cynical part of me says, well, that's great, but people will just buy more fuel.
Yeah.
And then it worsens. It's kind of like like you said, the housing shortage. If it's a supply problem, the basic principles of economics here apply, Gem, in that if you have a fixed supply and you increase demand, which is what the government's going to do by lowering the price, farmers and other people will just stock up because all of a sudden they have this budget that they can spend on fuel.
Yep.
And they'll be still scared about it. So there's been a lot of debate about this recently, but I personally think the government has a role to play in a bigger picture solution to this. Like as an electric vehicle driver, I have no consideration of what's happening at the Bowser. I'm sorry for people that think that's entitled, but I actually this is the whole reason I got an electric car, because they're way better and they don't use fuel. So I don't see it from that perspective, but I see it from like a government security perspective, in that if we're so dependent on fuel as a country, and we've been exposed again, this is the second time in 5 years, we got exposed in 2021 after COVID, we need to, as a government, as a country, own more of the assets.
Yes.
That's my take on this, is that we should have our own. We only have 2 refineries in Australia. We don't do any jet fuel, so we don't have any way to restock our Air Force.
Yeah.
We don't have any way to restock Virgin or Qantas if we need floods.
Yeah.
We rely on other countries to send us stuff.
And that's also security. Like that's a major security risk, not just a day-to-day from keeping our economy running, but that's a scary from a defence position.
Oh, yeah. It's huge. Think about
Big
it like...
topic.
Yeah. It's been beyond this podcast, but imagine if we were at war, not that we want to be, but imagine if we have 2 refineries. You could literally just take both refineries with one thing and they'll be down for years. And by then there'd be chaos on the streets because we don't have 30 days of fuel. So
our army would be like, give me a Tesla.
Yeah, give me the Tesla. I'll go fight the war. But the fuel, there's rumour that some of the fuel's not even in Australia and so on and so forth. So it's a big fiasco and one that hopefully brings relief but might be short-lived.
Short-lived, yes.
The second thing is surcharges on debit cards, credit cards, and just cards in general. There's a quote here from Pred Dragilla, the chief executive of payment company Fat Zebra. It says, for years, surcharging has been gamed for profit. It's high time the RBA put a stop to it. We've seen firsthand how the surcharges get misused. Banning surcharges removes the incentive to manipulate the system. So then the kind of option is to increase the price of your products.
Yes. So this is where I'm worried that I'm going to come off cynical like I did just then with the fuel excise changes. But what this will do is it will be passed on in different ways. But that's not necessarily a bad thing because at least then there's transparency. How annoying is it when you think you're paying something and then you hit your card and it's like $2-3 more? At least if it's on the actual ticket prices and businesses have factored it in, there's transparency there. So it doesn't mean that we're getting the items cheaper than what we did yesterday before this, from whenever the ban comes in. Actually, it's coming in from 1st of October. So it doesn't mean that September suddenly getting things cheaper. It means that they're going to change pricing, but transparency is a big thing. So at least you're going to know when you hit pay, I guess.
Yeah, so one of the most powerful companies in the world is Visa. Visa is the little badge that you see on your card. When you get your card from a bank, it's not actually from that bank. It's actually a Visa card that just happens to have the bank's logo on it.
Yeah, so Visa and MasterCard have the monopoly in this area. There's no competition. Yeah,
the third tier, if you brought one in, is a pure credit card play, which is American Express. You have Union Pay and a few others in different parts of the world, but Visa is like a monster, even compared to MasterCard. It's gigantic. And effectively, there's a quote here, the average margin on a cafe is about 3 to 3.5%. That's profit margin. If you put a merchant service fee, that's the fee that they're banning effectively, of 1 to 1.2%, that's half their margin. So what they're saying is, well, hey, if we get rid of this fee for the cafes, they're going to make more money. But as you said, like Visa and MasterCard are still going to get paid. It's just now it will be more obvious. Like you'll see it on your receipt. One of the things that to keep in mind is about 5 years ago, Amazon went head to head with Visa and they said, we're going to ban all Visa cards on our platform unless you cut the charge. And Visa said, oh, well, just do that, see what happens. And so what Amazon then did to fight back against them is they said, all right, anyone that doesn't use a Visa gets a $20 Amazon voucher every time they shop. To try and say, Amazon was trying to say, we're more powerful than you, Visa. Our customers value us more than they value using your card. Turns out Amazon lost.
Did it work? Oh, okay. Spoiler.
Because Visa is all powerful. Because if you have a Visa branded card or you have a MasterCard, you don't really care as long as it gets paid, right? So they make their money from a tiny little percentage that's now got bigger between you and the organization you're buying from, because they connect all the banks in the background. That's why Visa is such a great stock. Spoiler alert. So is MasterCard and American Express, also owned by Warren Buffett.
Not financial recommendations. Importantly, American Express. Don't you dare. American Express is excluded from this because it has a different regulatory setup. But yes, it'll be interesting to see how pricing changes for services like MasterCard and Visa and how that changes pricing where we're actually tapping as well. So this just got announced today. There'll be more on it, but yes, it's looking like it's going to have a big impact, but I think there'll be trade-offs.
The big one, just one final piece to why this actually has happened, is the RBA has always tried to cap the big credit card companies from charging you. They've always tried to put a cap on it so it could contain it. But what's happened in recent years, we've seen, so they've said, okay, well, this isn't a surcharge anymore. This is like a terminal fee. You know, the square terminal looks like an iPad. They're like, oh, you pay extra if you go through that one. And so they've just kind of gone around the rules. And so now the RBA is going, well, bugger it. You know, everyone, it doesn't matter anymore. There's no cap, there's no surcharge here. But you know what we're going to do? We're going to make it so that everyone has to tell like the Visa, the MasterCard, you have to say how much the surcharge was. And final piece is, why does the surcharge exist in the first place? It was to pay for people's credit card points. That was the majority of the surcharge.
Because it never used to be on debit cards.
Yeah. Or F+.
Yeah, and sometimes it was no credit card except if it was a certain type of credit card. And now it's just flat out everywhere.
Yeah, and now you can't go anywhere without getting a big extra percentage on your thing. So that's the world we live in. It's going to be interesting. Now, we do have some questions, Gem.
Yeah, so we've got 3 to dive into now.
Yes, we've got one on investing, your first 2K. We've got one on kind of resetting. And finally, we've got one on a work optional retirement plan. How do you get there? If we do answer your questions, they're strictly general in nature. We don't know needs, goals, or objectives. So be sure to speak to a financial planner. If you don't have a financial planner, well, we can help you find one. Just head to the link in your podcast player or in the YouTube description just below. You will find a link to get matched with a financial planner. And there's a chance that you'll get matched with our team as well, and we can have a chat. Gemma or I would love to hear from you and speak with you one-on-one. So you can go into the link in there and find a financial planner. The reason I'm saying that is we don't know your needs, goals, or objectives on the podcast. So be sure to take those into account. Do not act on the information. And if we mention things like an ETF or a superannuation fund, they have a PDS, product disclosure statement. Check it out on the provider's website. Final thing, if none of that made any sense, just head to rask.com.au/FSG and you'll find our financial services guide, which will explain everything to you. First question comes from Miss Tangled. We are in our mid-40s, earn about 190K combined, 2 kids, a $400,000 home loan and no investments. After working through some past gambling-related debt, I now manage the finances on my own. How should we think about the next step? Smash down the mortgage, start investing, or do both? And is financial advice worth paying for when one partner is not really involved in the money side? So there's a lot to this one question, Gem. Where do you start?
So because we're not giving any personal advice and there is a lot of detail in here, I thought we'd just pull out a few bits. But first of all, this is a really tough one. And there was actually more information in this that I pulled out.
Okay.
But it sounds like they have been doing, with Miss Tangled taking the lead, they've been doing a really good job by resetting, getting back on track with their finances. So that would have been a very, very hard thing to do. I actually just did an interview this morning with the AFR on...
oh, never mind us then. Yeah.
Australian Financial Review, on financial infidelity. And so that there's such a big conversation there.
What is that? Sorry for people that don't know. So
financial infidelity is, when we think about infidelity in relationships, we usually go to cheating. There was another party involved, but really it's just a breakdown of trust. So when it comes to financial, it can be having debts that somebody doesn't know about, spending habits that someone's not aware of, hiding bank accounts, hiding debt,
gambling in a way is probably one of those.
All of this type of stuff. It is a breakdown in trust. So you had a clear expectations and boundaries and different things in the relationship, and it's a break of that. So this one gambling generally falls into that, and it can be really hard to get back on track and to work through together. So it sounds like they've been doing a really good job with that. What I would say here is they're saying, what should they be doing? Smash out the mortgage, start investing both. This, I think, has nothing to do with what's best on a spreadsheet, because those answers are what should you be doing financially is better. I think here goes to, how are you managing money now? If you're putting more on the mortgage, is that accessible, and does that cause some issues that maybe aren't resolved? Is investing going to be better for you because it's more hands-off and it creates discipline? So for example, just my behaviours, I'm much better to invest and save than I am to have money just sitting there in an at-call account. So I have to go put it into my investments, otherwise I'll dip into it. So whatever makes sense on a spreadsheet for these people, or whatever an advisor says is the best strategy, I think they need to look at the behavioural side as well and see what's going to be that middle ground that works best for what they're doing now, because any of those would be smart financial strategies, but they have to work with where they're both at in their relationship and where the trust is. And then the next part of that was, is it worth getting a financial advisor if you're doing it on your own, essentially? And I'm like, absolutely, probably more so than when you have someone you can bounce ideas around. I think the value of a financial advisor or a money coach or just someone independent is you don't have to shoulder all of the, I hope I'm doing the right thing. That's a big mental like load to carry. So I think there'd be lots of benefit outside the strategy is just to get that support that you don't have to do it all on your own.
Yeah, well said.
Lots of opinions there. What do you think?
No, it's all, I kind of agree with all of it. Probably the thing that I'd say is in this instance, you're not really alone. Like most people I see deal in the business of one partner not knowing much about money or not really wanting to know much. Vices are very common. Gambling addictions are very common in Australia, very, very common. Drug addictions, other forms of, like you said, financial infidelity, they're very, very common. And so, like, let's group it all together in this big umbrella of mental health. If everyone had this kind of awareness of their own mental health and whatever, we'd all be great with money, because being good with money is actually just, everything about it is how you are with your mental health.
Psychology, yeah.
Yeah, it's got really nothing to do with a spreadsheet. It's all to do with that. And so just this morning I was having a conversation with someone who was not dealing with a vice like this, but she was saying that literally, like, she does all of the finances, all of it. Partner's very, very smart and all of these things, just not interested in any way. And also equally skeptical about financial planners and the finance industry. So you kind of get this recipe of one person really wants to do something and be proactive, and the other person is like not interested and kind of anti it. One of the things to keep in mind, I think, that we see when we give financial advice is the person who knows a lot about money, they're the ones that get the most relief from seeing the financial planner, not the one that didn't really care beforehand, because now they probably care less because they've got kind of two people to take care of it. So that would be one thing that I'd keep in mind. First of all, you're not alone. Second of all, I'd say financial advice is more important. So great stuff. And from there, once you're on top of that, basically any of the choices are good choices, versus in the past where you might have been dealing with someone with gambling debt and it may have been calling into question your relationship. As a simple quarantine piece, it would make sense that you're in control of the finances and you protect yourself as much as possible, because I see so many relationships where the one that doesn't have the vice in this instance really, really, really suffers.
It's very much disadvantaged, and cleaning up the aftermath for
the other one. So just protect yourself, and that's okay. Want to be Warren, don't we all? Fun. I know you have Rask Invest, which by what I can see has a $20,000 starting point to invest. What advice do you suggest for someone who has, say, $2,000 to $5,000 as their starting point for investing? Now, it's true, to invest with us, you typically need $20,000 to start investing, which is a common roadblock for some people, but there are plenty of other options of where to start investing. And if we take it at the lower end, $2,000, Gemma, where can someone start? So
I wouldn't start with the platform or where. I would start with what the plan is. Okay. So is this $2,000 and you're never contributing again? Is this $2,000 right now and then you have $500 a month or $5 a month? I think that's a more important question than what to do with the lump sum initially, because it will depend on the platform that you go with. If you're adding larger amounts, you'll have access to different platforms. Whereas if you're thinking it's $5 here and there, you'll have to go with a micro investing app like Raise, Perla are sponsors of the show. So I think it's more not so much the initial, which is a big consideration, but just think about how often you're going to be investing, because that is also going to be a roadblock. Once you know those two things, then there's so many platforms out there. Investing's never been more accessible. Yeah. You can go with $5. But if you're going to be investing $500 or even $1,000 a month, heaps more options open up. Okay, so give it to us one more time. The two things, what are they? The initial starting amount is important because there's entry blocks, like we just talked about Rask Invest, but how much are you going to be adding and how often? Because some brokerage platforms are going to say minimum $500 each time. Some are going to say chuck $5 in whenever you want. So you need to know what the starting is and the regular amount going forwards, and then you can see your options. Yeah, great. But we love Raise here, Perla Micro. Yeah. There's so many options out there. Who else does B-Shares Direct? It's not a micro investing platform, but it has minimum, like low minimums. Sharesies has low minimums. Yeah. Comsec Pocket has low minimums. There's almost too many choices nowadays to choose from. Just a quick one is the difference between a micro investing and a brokerage account. They're basically the same thing these days. Brokerage accounts, traditional ones like Comsec,
are $500 versus micro investing are typically like $10 or $5 or something like that? That's a good question. It really starts with then, okay, you got the plan, the platform, and then it's probably ETFs for most people, but it could be anything just to learn. Retire Ready sends in the final question and says, retirement planning. I want to get to work optional, but have no idea where to start. I have an investment property, cash, shares, and super. I'll be over 60. That's what they say. Sorry, I'll go again. I'll be over 60. But how do I decide what order I use these ETFs to? Sorry, go again. I'll be over 60, but how do I decide what order I use these things to live off? So Gem, they've got property, shares, cash, and super. The four most common ingredients, I would say, that we come across.
Yes.
Order of priorities, order of usage. How do you think about it?
So interesting, Tali actually had an advice client last week that had this similar question of what order. So the access is the major thing. So this person has said they're going to be over 60. So if they're over 60 and retired, they've met the biggest hurdle on accessing your superannuation, which is preservation age. So if they were 58, for example, and they wanted to retire, it would take out the super element for 2 years, and that, you'd just be looking at, well, how do I bridge that gap? But for this one, they've got access to all. So it will really come down to questions like the investment property. Is it rental income, or are you selling it to have a lump sum that you might even invest or put into super? There are advantages to moving, if you meet preservation age and a condition of release, from 60, moving from accumulation, the bucket super, to pension mode, because it goes into tax-free earnings and income. So even if you have assets outside that you could retire and use, like rental income and things, it might be favourable to start super regardless and have a mix of all. But what's our saying that we can never say? Porque no los dos.
Oh yeah, porque no los dos.
You could be doing a little bit of everything, and realistically, you probably will. Maybe you keep enough cash for your emergency buffer, and then you put aside travel for the next year, and that's what you'll use that money for. Maybe your shares have some dividend income that contributes to how much you want. Maybe the investment property does. I don't think you don't need to pick one, draw down completely, totally exhaust it and now go to the next. Usually most people have a mix of several different income streams that make up what they need each year.
Yeah, that's fair. I think if Tali was here, she would say layering. I think she calls it income layering.
Yeah.
And if you think about this, anyone can do this, not just retirees and not just people that are wealthy, but what are the sources that you could rely on? So you may not have, quote unquote, the dream passive income right now, but maybe you have, a sense of, well, if I lost my job, then I could, draw down on this cash which is the emergency fund for 6 months or 3 months or a month. Or once that's done, maybe I could then sell some shares, and that's my next layer. And then once that's done, maybe I can sell my property or whatever the case may be. When you get to retirement, the big one, obviously, is get financial advice, because it really does help. This where it pays for itself. Another one that you mentioned, a benefit of shuffling money into super. There's a tax element, but it also helps if you're eligible for the age pension. So this is at 67. It's not necessarily to do with your super. So not to be confused. There's a super pension, which is the one Gemma mentioned, but then there's the age pension, which is the one they talk about on the news a lot. That's from the government. And if you shuffle more of your assets into super, there's a chance that those are treated differently when it comes time, so that you might get some from super, some from the government, and then you'll be able to have your own term deposit. And then you can draw income from all sources. Maybe you can even work 1 day a week, because this person said work optional, which says to me it's not fully retired or early retirement. It means having the option of reducing work, not doing it at all, or working full time. It's complete freedom in that regard. It's work optional. And I do see a lot of people that are work optional still work a little bit.
Yeah, it's about knowing that you could say, I'm out of here today, but you're there because you want to be at work, not because you have to be. Yeah. That would be a great feeling to have. But yes, you would just work, you would potentially use a little bit of everything. And an accountant will also be important. So if you get financial advice, great. It will cover a lot of the tax elements in there and what you need to check with your accountant. If you don't get financial advice, you want to talk to an accountant anyway, because if you're considering selling the investment property, if you're drawing down on shares, selling them, you want to consider the tax implications of that. So to answer this question on what order, I'm thinking it'll be a little bit of everything, but financial advice would be very, very valuable, and so will a tax strategy with an accountant.
Yeah, absolutely. We see people flick over to pension phase, like Gemma said, with super, but not until they've boosted it with maybe selling the investment property and putting that in there, or maybe transferring some cash and then claiming a tax deduction. There's so many different strategies to shuffle the right
60
mixer.
is such a cool age because all these strategies open up, like super nerd here.
Yeah.
So this is when you want to get financial advice. If you haven't done it before, in the lead up, the 10 years prior to 60, I think is so critical for financial advice and strategies. But if you haven't already got advice, 60 is when you want to definitely be getting it.
It's definitely when, unless you're like super wealthy or something, it's when you have the financial planner has the most options for you. So yeah, check that out. So just to recap the questions, Retire Ready just asked about being work optional and using the different buckets of wealth. Think about it as layers, or think about it as buckets, as Gemma would say with super. Wannabe Warren said, how do I get started with $2,000? There's micro investing, there's brokerage accounts. It's about having the plan, the platform, and then you can maybe choose like an ETF that you think is like popular and respectable. Mistangled, merging from a gambling related debt, which is amazing. Good on you for being strong enough to get to that point and to now think proactively and look forward. Definitely a good opportunity to get financial advice. If not, cling to those books like The Barefoot Investor, even Strong Money by Dave Gow, like Gemma Mitchell's book. That would be a perfect book, wouldn't it?
The money. Well, it sounds like they might have done a lot of their reset, but yes, absolutely. Everyone buy my book.
Yes, everyone buy Gemma's book. Apparently, she said on Twitter, not Twitter, what's it called? Instagram. That's what the kids call it. You've got 2 books in the works that we said, or book 2? I couldn't remember.
Book number 2.
Book number 2. So Gemma's got book number 2 coming. Are you allowed to give us anything about what it might be about?
It's about money.
It's about money. Wow.
No. But amazingly, coincidence, on the day that I submitted the first lot of the manuscript that was due, I got my first royalty check from the Money Reset.
Wow.
I'm not putting it on the Finders Keepers because I'd smoke you.
Yeah, wow. Very wealthy. Okay, and Finders Keepers did write in and didn't ask a question, just said that how much better than us they are, with $5,000 already in the kitty that they've saved up from this challenge. So if you haven't already downloaded the spreadsheet, it's available at raskmedia.com.au/finders. It's just a spreadsheet you can use to track how you're going this year. We'd love to know what you have been doing and how you're going to go about it and what you're going to spend the money on.
Send us in
Gemma's obviously going to
ideas.
Japan. I don't know what I'm going to do. Maybe I'll just reward myself with a nice Guinness. I don't think there is a nice Guinness. I think they're all the same, but I'll just have one of those.
Well, most of mine's going to be going to a letterbox, but if there's any left over, that would be Japan.
Okay. Well, you have to send us a photo of this letterbox once you're done too. Well, this has been heaps of fun, Gem. You can find Gemma on Instagram. We've got some great episodes coming up. Some special episodes as well, actually. I don't know if I'm allowed to lift the lid on what they are, but there are some special episodes coming to you soon. So if you like the show, be sure to share it with a friend. You can get in contact with us with the links in your podcast player. Gemma, thanks for joining me.
Great, thank you.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.